Welcome to Lecture 5 of the How to Trade Forex course. And in this part of the course, we're going to look at currency pairs. So which pairs do we actually trade and the characteristics of each type of pair. We're going to look at trend lines and begin to get our eye trained in to the movements of currencies so we can take advantage of them while we're trading. So in trading Forex or currencies, we tend to look at the major currencies: the euro, the pound, the Australian dollar, the New Zealand dollar, the US dollar, the Canadian dollar, the Swiss franc, and also the Japanese yen. And we're always trading a pair of currencies, so buying and selling one against another. It's exactly the same as when you take a foreign trip and you need, for example, to use some pounds to buy some US dollars if you go on holiday back there, or if you're coming back from the States and you want to sell some dollars to buy some pounds. That's exactly what we're doing. Now, my philosophy of trading says keep things as simple as possible, and you'll find that I personally only trade the pound against the dollar. There are probably other pairs that I could trade and that the techniques that I teach would work on. So, for example, the euro and the dollar, and even the pound and the euro would probably work. But I don't want to complicate it. I don't need to. I get enough very good trading opportunities without actually expanding into those different instruments. All currency takes place between two currencies that make up a pair. And again, I only trade the pound against the dollar. All of the currencies have a symbol made up of letters. So the GBP stands for the Great British Pound, and the USD is for the United States dollar, for example. The pair is therefore known as the GBP USD, and as with every pair, one currency acts as the base, and its letters come first. In this case, it's the GBP, so it's always the pound dollar and never the dollar against the pound. We are always using one part of a currency pair to buy or sell the other member of the pair via an exchange rate, and that exchange rate is what we call the price of the pair. There are many other currencies and currency pairs that could be traded, far beyond those 8 majors. The best currencies to trade, though, are ones that firstly are very liquid, and we can see on these pie charts the varying degrees of liquidity. So you've got the US dollar against the Japanese yen, 78% on the Tokyo Exchange, so very liquid. In London, we've got the pound dollar and the euro dollar and the dollar yen, which make up the highly liquid ones. As well as being highly liquid, we want the currency pair to have a price that's reasonably volatile. And you can see from this chart which are the most volatile prices. And we've got the euro dollar, the US dollar to the yen, the pound to the dollar, and then we're coming right down. So by the time we get to the Australian dollar, the Swiss, and so on, the amount of volatility isn't great. It's another reason why I would tend to leave those alone. And, of course, the third reason that we choose to trade with a particular pair is that they're very familiar with us. The more familiar we are, particularly with the behavior or the personality of a pair of currencies, and also with the news regarding those currencies, the more likely we are to be able to get the trade in the right direction, to be buying when we ought to buy and to be selling when we ought to sell. The fourth reason that we would choose to trade a particular pair is the suitability of trading hours. Once we get to Sunday evening in the UK at 10 o'clock, through to Friday evening at 10 o'clock, then we are on a 24/7 trading platform here. But of course we get different opening times for the currency exchanges around the world. You can see from this chart here that there's a good degree of overlapping. We've got from the bottom left here the New York and United States exchanges opening, and then we get some overlap with, first of all, London, then with Germany, and then there's no overlap at all between the Japanese markets and the US markets, a little bit with Germany, a little bit with the UK. And then we come to the Australian market, which doesn't overlap with either New York, London or Frankfurt, but it does overlap with Tokyo. And then we get to the exchanges in New Zealand, and they basically are running very similarly to the ones in Sydney. All of my trading experience and the tools and techniques that I use have been developed and tested on the GBP USD pair. So they haven't been tested and they weren't developed for other pairs. These tools and techniques may work with other pairs, but we're not making any claim that they will. They have not been developed for or tested on them. The most likely alternative to trade, if you're not trading the pound against the dollar, would be the euro against the dollar. I am fairly confident that the tools and techniques that we're teaching here would work on that pair, but again, because I haven't tested them, I can't make any claim. Your trading screen can be used to trade a number of different instruments. So that's not even just different currency pairs, but other things too, even stocks. And even though I only use the one, that's the pound against the dollar, that it is quite easy to add to your screen other instruments and to use them. Here's a bit of video footage which explains how to do it. As you know, I normally only use the pound-dollar currency pair when I'm trading Forex, and we've been going into that in a lot more detail. But just to show you that there are many other options available and many other instruments and options that you can trade within this, the GKFX MetaTrader 4 trading platform. And to find them, we go up to the left-hand area of the trading screen again, where we're currently showing the ticks for the pound-dollar. And you'll notice here it says tick chart, and if I then go across to the tab next to it and put symbols, we'll see we get the symbols. If this chart isn't showing at all, then you need to go to the view and put in market watch. Just left click on it and it will appear. Now we can see the only option available at the moment is the pound dollar. So if we want to change that and put more in, I simply right hand click in the area of this box, and instead of hide all, I'm going to put in show all, and there they are. And you can see there are lots of them. We've got all sorts of different currency combinations, and as you roll the cursor over them, it'll tell you what each of them are. So you've got the euro versus the pound dollar here, you've got the Australian dollar versus the US dollar, and so on. So that's where you find them. But I don't use them, so I'm going to remove them, basically hide them all, and go back to my tick chart. But that's where we find them. So the trading hours then, we can see again on this chart, depending on where you are in the world, will depend on the best trading hours. But basically, the time that's best to trade is when there is most movement, most volatility, and most volume going through. And that would be in this area here, where London and New York are both trading. So we're talking about London from the UK morning time, then New York cuts in on the afternoon, and away we go. I don't really know why this slide actually seems to go from right to left, but this is the area we're looking at. So we're talking about on UK time, sort of 11 o'clock in the morning until about 4 o'clock in the afternoon. That's when there's most volatility overall anywhere in the world. The markets actually open on Sunday evening at 2200 hours or 10 p.m. that's UK time, and close on Friday evening at 10 p.m. or 2200 hours, also UK time. The actual real specific market opening time is the start of the working day in the Far East. The very first minutes of trading are actually in New Zealand, and the closing time that we've set is for the end of the day for the close of business in New York. Throughout the day, markets are opening and closing in New Zealand, Australia, Hong Kong, Japan, UK, and in the US. Therefore, we tend to see the emphasis on different currencies being traded, at different levels during different parts of the day. The currency markets are multi-trillion-dollar markets, and most of the trading is to support international commerce rather than the likes of you and I trading specifically for profit. But it's time now to start thinking about making some money from these forex markets. And that brings us to looking for the first time at price trends. To make money, you'll need to understand price trends. To make money, we can either take advantage of the price momentum of a trend in a particular direction or profit from a price that's changing in its level and direction. We can see here a very broad brush trend, the arrow going from upper left down to lower right. Your eyes should be able to see that that is actually following a trend. This is a 1 minute chart, and over time we're getting what we call lower highs. So we've got higher highs up here, lower highs down here, and also lower lows. So we've got a low here, but a lower again here, lower again here. So the difference between the highs and lows is actually going down on average, and therefore we've got a trend which is moving in a downward direction. Price trends can appear to be in different directions when viewed, though, in different timescales. Here we may have been considering buying the currency for most of the time. So the price was going up and we were thinking about buying it, and we're in a 5 minute price chart. But the same period looked at as a 1 minute chart could tell a very different story. Here as 1 minute we see the price has actually been falling. So we need to know what we're doing here. If we're trying to go with the trend, which is always a good idea, we need to know what the trend is. And partly what the trend is depends on our view of the time scale on which we want to trade. So if we're scalping and taking quick profits, we may want to use these 1 minute price charts and very sharp, short changes in trend direction. On the other hand, if we're involved in a longer time, which could even be hours or days, then we may take a different view. You should now be spending short periods of time just following your trading platform to get your eye in on price trends. You don't need to do anything other than just look and see which way you think the price is moving, and also be trying to predict in your mind's eye when you might come across a change in direction. Look at the charts every day, even several times a day, just for a minute or two, and look at them in different timescales to train your eye. Try drawing trend lines and predicting price movements and see how you get on. Well, that brings us to the end